From one retail investor to another, this is Trader72. Welcome back, guys, to my show. I hope you had a tremendous weekend, relaxed, or whatever you were doing out there. I hope it was good. I know I had a relaxed one, and I'm ready for the new week. Today is, of course, pre-trading update for Q2 Netflix. One of the ones I own at the moment on my portfolio. It's happening on Thursday after the bell. And today we're just going to check out basically the matrix, the market expectations, and what will shape this quarter for Netflix in terms of forward guidance. So without further ado, guys, let's start this off. What will the numbers be expected? Will there be an adverse reaction to them or not? There seems to be a little bit of anxiety at the moment in terms of this pre-trading update on Netflix. And I think there's several little key components to that anxiety. Now, first of all, the share price is at a 52-week low, so already quite low as it stands. So we're hoping that even with potentially some, if there was to be some bad news or the numbers are not quite right, we're already at a certain bottom rate. So we'll see. But anyway, let's start this introduction to the markets for this pre-trading update. Now, I think the biggest component here we're looking at here will be the organic growth acceleration, which states there on the graphics. And scalability of its new initiatives, so advertising, gaming, and live ports. So I think people will just check that will be the first port of call for Netflix. Now, the stock has faced a 25% downward trajectory year on year, pretty much, driven by various different situations. Some of M&A, of course, not happening with Warner's, Roku. Slight numbers that weren't, the subscribers number weren't quite there. Maybe some of their projects or some of their recurring series haven't quite come to scratch, amongst many other macro sentiments, fears, etc., and plateauing engagement really as well. So I think the subscribers up to this point, obviously we know that Netflix have been on subscription based and new subscribers, and of course that has slightly plateaued. So traders should know that an option pricing analysis implies an expected move roughly about 7% on depending on the results, so either or on each side. We'll come to that in a bit anyway in a minute in terms of that. So I think this is the basic starting point here. 25% down year on year in terms of actual stock price, and of course options implied on earnings day, which could go either way. So what we'll be looking for is top line revenue, operating margins, and average revenue per member. So let's move on to that next step here. So this is what we're here for, guys, the actual numbers. What are we expecting for Thursday's pre-market update from Netflix? Well, there we go. So these are the numbers altogether. So on the left hand side, so obviously we've got revenue, EPS, EBITDA, and paid membership. So I think the biggest two that we're going to be taking away, of course, is the revenue and the EPS to start off with. Now we're expecting around $12.58 billion in revenue versus obviously Q1, which was 12.17. And at the moment actual Q2 25. So what we're expecting here all in all is an expected year-on-year change of about 13.87. so that would be the first kind of step for Netflix to tell its investors and obviously obviously present that one out. EPS gap will be at 0.179 pence, so obviously slightly down on Q1 and the actual. So the reason why, as it stays there, it says, note, the massive drop in year-year EPS is distorted by an unusually high tax and accounting adjustment in Q2 25 rather than a decline in fundamentals profitability. Content amortization is also higher in H1 26 due to heavy front-loaded release schedule. So they tend to obviously budget and produce their projects right at the beginning of the year, which has always got a bit of a dent on earnings per share, as well as it says there, a highly tax accounting adjustment. So bear that in mind when you look at the result, that the EPS is slightly distorted this year, or for this quarter anyway, and for those exact reason. Now, the pay membership hasn't really changed at 325 billion at the moment. So that's the kind of numbers we should be looking at straight off the bat here, pretty much at the moment. The revenue in the EPS and, of course, the operating cost, which we're going to come to in a minute. Now, the next big step, which I think is even more important than the current numbers they're going to give us in Q2, which hopefully will be up to the test, is the forward guidance for Netflix. Now, this is crucial to the actual share price moving in either direction. So if those numbers don't get hit as stated here, then I think we will have some kind of decline in the share price. And of course, if they do hit maybe 3 out of the 4 there, it will be obviously help to move the stock back up to north of $80 a share. Currently at 74, 75, the last I looked at. So revenue growth for the next year on year, hopefully we're looking at 12 to 14, but I think analysts are looking really at 15% year on year. As it says there, so to raise fears of organic deceleration. So that is obviously a deceleration of the growth rate will be a pretty bad number and a bad news for Netflix. Operating margins will be expected at 31.5%, full year target. This target factors in $275 million in M&A costs from the termination of Warner Brothers Discovery deal earlier this year. Now, the biggest point here, which I think is going to be possibly the best news for Netflix at the moment, will be the increase in free cash flow. I know as you guys maybe follow me or not, my biggest bugbear, but actually important factor for any investment is free cash flow, the lifeblood of the company, the actual cash left after all operations are paid off. Now, we're looking here hopefully at an increase from $9 billion to about $12.5 billion, $9.5 billion in 25 to $12.5 billion. So $2 billion increase in free cash flow, which would be bloody marvelous news for the lack of better words. So from there, we'll obviously be looking at a potential, depending on the news and of course where the share price goes. Bear in mind the share price is at a 52-week low, guys, at the moment. So therefore, we would be possibly expecting a massive share buyback, and we all know that share buybacks when the stock is cheap is good news for us investors. It means they'll be buying more hooving up some shares, excess shares at the moment off the market, which obviously will make your shares more valuable. So that's the point of a share buyback in one sentence. If you guys don't know what it is, please ask me in the comments below. I can tell you for the next video. I can actually give you a kind of more of a deeper explanation. But basically, a share buyback would be what we'd be looking for, especially if the share price does fall towards 70 mark, more than going north of 80. But even at 80, I would still expect a share buyback from the company, considering the performance of the share price for the past 12 months. Now, the next key point here, for number 4 on the list, would be the ad revenue scaling. Now, that's going to be quite an important part of the extra explanation of the pre-market update. So we're expecting a $3 billion expectation for forward FY 2026. Netflix expects ad revenue to roughly double year on year. Traders will look for updates on closing the revenue gap between ad-supported tiers and ad-free tiers. So I think the expectation of what those will be in terms of ad spend will be very, very important to Netflix. So that is going to be another key number that I think most analysts will be looking for, and also in terms of the presentation on the back end by the CEO of Netflix. So the takeaway from this is investors looking for reassurance that Netflix can sustain strong top line growth, expand margins, and scale its new revenue stream while returning more cash to shareholders. So I think these two at the end there will be a key point to that. So I think if we have a revenue issue under those numbers, we're going to have a bit of a problem, I think, in terms of share price or even operating margins, but specifically revenue growth, which is the organic growth we're looking for. And I think if we're looking for a major share buyback or a major spend there by share buyback, I think that will at least balance the two. Now, if we get those 3 out of the 4, I think we'll be looking at a fairly upscaled share price. So what's the reality check from the back end of this, guys? So we'll be looking at key 3 points there. Organic revenue growth versus deceleration. This is the big one. If revenue growth hits or exceeds 15%, it proves that domestic prices hike and ad tier scaling are working organically. If it drags close to 12%, the market will scream growth slow down. God forbid. Now, I think this is a bit harsh. I think it will probably come, I would assume that it would come between 12 and 14%. But again, we don't know what will be mentioned. And obviously that will however good the current growth a quarter it will be, this will be the main number people will be looking at, or analysts will be looking at. The EPS seasonal distortion, your audience needs to know that obviously softer EPS figures isn't death sentence this quarter, so I don't think that's going to be a major issue, even if it doesn't come quite on right, obviously due to the payments that I've mentioned already earlier on. And of course the other major point here will be the share buyback, which I think we would expect, especially with an increase in free cash flow by $2 billion this year. Netflix is sitting on a mountain of cash, even if the operational numbers cause a temporary knee-jerk drop. An aggressive share buyback guidance can completely change the tone, putting a firmer floor on the stock price. So I think that would be an expectation there for me. Fundamentally, there's a pre-print anxiety. I think there's a massive anxiety on this at the moment. That's why the share price is kind of wobbling between 75 and 72 at the moment. It dropped again on Friday, I think, because obviously a lot of the long-term traders, institutional traders may have got out before the results and may come back in on the back end, whether or not it's cheaper or maybe a little bit higher. But beneath the anxiety, the fundamentals engine is incredibly cash generative. Whether we swing to 80 or drop to 68 will entirely depend on whether the management can prove their 3 billion ad revenue machine is scaling fast enough to outrun any slowdown in mature markets. Yes, so I think the ad spend will eventually replace the obviously the new subscribers. Now, obviously, initially it was all based on new subscribers, a granular of new subscribers, but obviously that will eventually flatline. There's only so many people the world can join Netflix as a subscription. So for me, it will be down to the ad spend and how much they generate from ad spend going forward. I think that will be a major part of the business. If that doesn't work, then we may have a problem, guys. But for now, let's hope that this gamble is working in our direction. So that is, I think, the reality check, I think I like to call it, of moving forward with this pre-market update. So that's the pre-market update for Netflix, guys. I thought we would do a quick one on it, really, just to kind of pre-warn if you guys were looking around to see what is expected. That is, I think, the key point of what it will be expected by Netflix for Thursday. I will do pretty much whether that same night or Friday morning first thing, a result based on what we've just talked about now. So please do follow me and subscribe and like for the next part of this show for Netflix pre-market update. Now, moving on swiftly to this week's obviously result. The earnings season is upon us, guys. So let's go. So what do we have here, guys? Tuesday, we've got JP Morgan opening up the earnings seasons as it always does. The curtain opener to the season for Q2 earnings. JP Morgan, the banks, obviously, Citigroup, Bank of America, Goldman Sachs, and Wells Fargo. The big boys are out on the first day there. So this will be interesting because I think that will kind of drive forward where a lot of the companies are expected. We are expecting overall about 24% growth from the results this year. I think there's going to be some interesting ones where obviously we've got very, very high valuation on stock prices at the moment. So any small miss will be an opportunity to potentially buy on the dip or even wait it out a little bit more and buy at a really good discount. So that's my advice going forward, which is obvious advice. I'm sure you will say that to me, but sometimes it's worth stating the fact. Wednesday is obviously the big one with ASML, the first of the semiconductors, AI chips demand, lithography outlook. That will be interesting. Now, they tend to obviously always perform. So, let's see what they come up with in terms of numbers on that Wednesday morning. Johnson & Johnson is also in there, BlackRock and Stanley Morgan. Now, follow up the semiconductors, TSMC. I've done a bit, guys, do please check analysis on all of these companies, especially the semiconductors, which I did in pretty much in depth for the past 2 or 3 weeks, in terms of where they sit in the equation, what do they do, and their numbers, etc., etc. So please check my playlist if it's on one side or the other of me in reality. So that would be interesting. United Health Group, which obviously I used to own at one stage, made quite a bit of money on them initially when I sold off, but could have made a lot more if I hadn't been too long on it. Unfortunately, My lack of patience normally does me in, but this time United Healthcare was too much patience, and the stock got away from me when I was at making quite a bit of money then. G Aerospace, I think a lot of the big boys own that in terms of hedge funders there, so that will be interesting to see how that pans out. And of course Thursday, as I said, it's Netflix, guys, the one I've just done now. So we'll see what happens on the back end of Thursday's bell. Up from the weekend, from the close of play on Friday at 77. US NASDAQ at the moment is down by about 1.5% due to those news. US 30 is also slightly in the red. I am doing quite well on Microsoft, bought a position in 382 on Friday. I have actually just sold it off in the last hour for a quick profit. This was a short-term trade. I do like Microsoft. I think they're at a great price and will buy more if they fall back slightly towards the 380. But currently, I sold it pretty much at that price. Bought it at 382 last week. I should have bought into Meta. Didn't. That's performing outrightly right at the moment. Uber still sideways, as you can see there. So in terms of Netflix themselves, guys, worth mentioning, let's have a quick look at Netflix for in terms of chart. Back on Netflix's chart then, guys, based on the results today. Now this is based on a 1 week chart, which obviously gives you more of an overall picture. 200-day moving average, just literally surviving above that at the moment, as you can see, and a 50-day moving average, obviously, which has gone through quite a while back in October. Did briefly bounce off 50 and then went back down, obviously. The little blue triangles, as you can see, is where I bought, which I bought at the time thinking it was a good short-term trade, and ended up being obviously falling back, a bit of a catching knife, which nobody likes to see. However, at the moment, based on this, I think it's just above 75 or just under $75 a share. I think that based on the results, which is going to be either, as we said, about 7% on either side, which whether it's good news or bad news on the, based on the numbers and the forward guidance. I think if we're looking at missed numbers, bad forward guidance, maybe a few misses here and there, I think we could be looking at going straight through, we're going to highlight this, straight through the 200 moving average, which obviously, as you guys know, once you go through that, means obviously a lower to lower, potentially. So obviously, if you bypass that guy on the up, then obviously you will move on the up and up. So if that goes through this, I think we're looking at $70 a share. I think we could be looking at a further fallout, almost to potentially 60 to 50 there. Again, this is depending on the news, what they announce. As we all know, it's all in the future at the moment. So I think we can only speculate that I think if it falls through 70, we could be looking at next step at least to 60, which obviously as a shareholder, I don't want to hear, considering I've bought already quite a bit. It's the second biggest share company in my portfolio at the moment in terms of shares bought. So potentially a potential chance to load up or even buy in at a very good entry point. So I think if the results depending, I think anything by 70 or below could be a great buying point there, I think, for anybody that wants to enter a new trade based on the after results or post results. If the numbers were to be good, we could be looking at a pullback, or not a pullback actually, God, hopefully not a pullback, obviously a high of potentially back up to 80, 85, depending. But I think 7% either end, based on good news or bad news, is probably about right at the moment. Of course, it could be worse, so I'm only speculating. But anyway, I think we're looking at potentially there a slight up on the momentum. But again, this is pre-trading update, so we'll see what happens. So that's the state of play, I think, for the chart, guys, in terms of Netflix, if there was to be an entry point. I still think that if there was good news and it went up to 80, I still think it would be a great price to buy at, just to the fact that obviously we were looking at an average between $90 and $100 a share. And I think 80 would still give you easily a 20% discount based on the DCF model, free cash flow DCF model. At the moment, it's currently at 27-28%, so it's a great time to buy in. But obviously, with the rise results coming up, a lot of people will get out before the pre-market results, and probably will wait on their hands till they know where Netflix sits. So definitely a little bit of an anxious time for all concerned to see what they're going to come up with. I wouldn't normally want to be in a pre-trading update for you know, unless you're in a long term where you don't really see that as an issue, you see beyond. But it's looking more and more likely like I will be in. Now, my big problem at the moment will be whether or not to cut by half my position or not, just to be safe, or just to keep it as it is and add more on the back end. Will depend, of course, on where that goes. So that's pretty much where I think Netflix is at in terms of chart entry point or exit point, even depending on what you want to do, guys. So there we go. So let me know what you think of this predicting update. I mean, I think that in terms of actual analysts, there's still very much a buy rating on Netflix with a target of 120 to 130. So they you know, at the end of the day, it is still a very, very good company, which will be around for many, many more years. I think it's going through a little bit of a testing patch at the moment for the first time in a while. But we don't remember, guys, that back in 22, Netflix was on its knees almost down, very much down in its share price. And if we actually pull back here, as you will see from back in 22, it was at an all-time low of $15 a share. Now, it has since then had a phenomenal rise. I think Bill Ackman was one of them who bought on pretty much around there and fell and sold and actually went back up. So shows you that even the biggest investors don't always get it right. Anyway, from that point of view, guys, subscribe and like. Let me know what you think below in terms of my where you think maybe the Netflix will go on the back end of the trading update Q2. If you feel there's anything that I've missed out. Anything, guys, always happy for you to make a comment and let me know your thoughts. So from one retail investor to another, this is Trader 72. Busy week, earnings season upon us. I will see you again very shortly. Take care, guys.